And then let's talk about the ETF effect. I shared this in the student Facebook group, but I want you to look at something. I marked this in the chart, January 2024, and Ethereum ETFs approved. So there's that big candle there. This actually happened live on one of our accelerator calls in the first cohort. We got the approval live coming in. What I want to show you is, look how funny it is. Everyone was saying, this time is different, this time is different. ETFs are approved. We have ETFs now. Institutions are in. But look what happened after good news came out. Look what happened after this hype narrative got confirmed. We've just been going down. Everyone thought, hey, once ETFs are approved and institutions get in and traditional investors can get exposure to Ethereum, we're gonna do this. Did that happen? Of course not, because it's always the opposite of what people expect. And so I call this the ETF effect. So now at current day's price, we are pretty much at the price that we started the year at 9 months ago. So here's the January 1st, where is it, candle? Let me hover it. And the opening price was $2,281 on January 1st. Current price is $2,468. So we're only what, like $200 off? Less than $200 from here to January 1st open price. So what I'm trying to say is, if you had held on to your Ethereum all year, you'd be at break even. Let's just call it break even, okay? $200 away. Holding Ethereum all year would result in break even at this point, 9 whole months later. And so this is why you take profits at the highs. You want to take profits. And I'm always bagging on the importance of taking profits. I talk about it in the course, in student emails, in the student community groups. You got to take your profits. Of course, not randomly out of nowhere on an impulse. You must plan out your trades ahead of time and manage those trades according to how you originally planned them. So maybe you didn't enter Ethereum on January 1st, which is fine, but let's just say you did. You want to have mapped out everything. So wherever your stop loss might be, and you gotta have your profit targets. When are you gonna get out for a profit? When are you going to exit for a gain? You can't just be like, well, I'm just gonna buy it now and, we'll see where it goes. Maybe it goes to 10K. No, you need to be realistic, because leaving your trades open-ended and not having an exit plan is how people lose their money, is how people become bag holders. They end up holding on to something that is so much in the red, so deep in the red, or in Ethereum's case, if you bought on January 1st and you held on till present day, I think that's somewhere up here, then you'd be at like, what's the profit? Maybe 8%, if I even place that right. Yeah, about 8%, which actually doesn't sound all that bad. But it's like, you're so close to break even. So close to break even that it's like, why do that when you could have taken profit here at this level? If you took profits up here, it would have been 40%. Let's just say you didn't even take profits off Ethereum at 4K at the very top. That's okay. It's normal not to get the exact top. But even in these areas, 57%. So you want to look at places where you're actually going to take profits, close your investments, exit your trades, and actually realize a profit, so that you don't watch all this happen all the way up 40%, 60%, 70% profit only to see it come back down to 6%. 5-6%. That's not what you want to do. That's not what we're in the market for. Long story short is map out your entries, your stop losses, your take profits before you even commit the capital. So yeah, just wanted to show that January 1st, we are $200 away from that yearly opening price. And then Ethereum ETFs were approved here, and everyone was saying, we're going to go to 10K, we're going to go to 5, 6, 7, and then to 10K. All these narratives to get you in. All these narratives to get you buying high with promises that this time is different. And we're, at this candle, when the Ethereum ETF was approved, Twitter, crypto Twitter was like, we will never see this price again. We will never be this low again. Of course, that was wrong. That is the narrative effect. The narrative effect is always getting you in at the wrong time and out at the wrong time. And this, as you can see, is the ETF effect. ETFs approved, people expect price to go up because that's good news, but instead price has just been on a straight shoot downwards since May. So the narrative effect, the ETF effect, it's all to get you hyped up and fuzzy feeling on the inside, only to witness prices and your portfolio plummeting soon after. It's not good. It's not good stuff.